Vivek, hi, good morning. Good speaking with you as always. You had a chat with analysts, in the last 1 week, and we've been reading a lot of notes which suggest that you're betting big on a gradual urban recovery. However, we've not seen any recovery play out just yet. In terms of a timeline, how long do you think it could take for both the rural and the urban markets to see a sustainable, say, maybe a double-digit recovery?
Good morning. Clearly, as you outlined, this has been somewhat of a two-step forward, one-step backward kind of a story. We are still seeing a gradual and an uneven recovery. There are some pockets of strong performance, some pockets of sluggishness. There has been a gradual pickup in urban, that's the good news. While we have done very well in rural, I think there is still some sluggishness in rural, but I think what's comforting is that things are headed in the right direction, and we still remain optimistic that things should improve in the second half of the year. Net, fiscal year 15-16 should be much better than the last fiscal year.
Okay, so can you just throw some more color on this gradual pickup in urban? In which segments are you seeing a pickup? In which geographies, are you noticing some rebound? And going ahead, where do you see the growth triggers coming from?
So what I think is driving this growth uptake, first of all, is an improvement in consumer sentiment. And so if you look at the RBI Future Expectations Index, the Nielsen Confidence Index, both of them are at an all-time high versus the last 4 years. Second of all, inflation has been well under control, and typically that's a bit of a leading indicator. And once inflation is under control for about 3 to 6 months, typically leads to improvement in disposable income. The outlook for job creation also has been quite positive. And then finally, a lot of companies are readying their arsenal to launch new products in the second half of the year ahead of the festival season. And given the benign commodity environment, there is enough cushion to deliver strong profit growth along with intensifying promotions and being able to launch new products. In terms of, I think, geographies, we are seeing better growth in the north of India. The south was an area of concern last year. That has been picking up quite nicely. But I think the eastern part of India, which has a higher salience of rural, that is continuing to face some stresses.
Okay, just to take you up on that point about the launch of new products, even in the quarter gone by, your volume growth in the domestic business was around 13-odd%, and that was led by new product launches that you had in the household insecticide segment. Going ahead, say in the next 3 to 6 months, what are the new products that we can look forward to from the Godrej consumer stable?
For this year, we are getting about 10 launches ready. The exact number of launches will depend a little bit on the overall macro environment, but we are looking at launches across all of our major categories in insecticides, in hair colors, in skin cleansing. Along with that, we are also looking at some launches in air fresheners and the health and wellness space as well. So across the board, we are looking at a series of new launches, but the exact number will depend a little bit on the overall macro environment.
So that would also mean higher amount of ad spends, because in the quarter gone by, your ad spends were not much. They were at about 12% of revenues, which is what you've seen on an average. But given that you have 10 new launches going ahead, ad spends as a percentage of revenues will go up, you think?
I think ad spend as a revenue will go up, but typically we keep ad spends between the range of 11 to 13%. And what we look at much more is overall marketing investment. That's a function of both ad spends and promotional expenses. Those typically tend to be between 18 to 20%. So that's the range I think we feel comfortable with. And because of the supportive gross margin situation, we believe that we can increase our ad spends and still deliver profit growth ahead of sales growth.
Okay, so given that we are seeing a bit of a pickup in the urban demand, as you stated yourself, what kind of growth do you think you can eke out by the end of the year? I'm talking about volume growth. You think this 12 to 13% domestic volume growth is a sustainable number, or do you think that rural slowdown could drag it down through the course of the next couple of quarters?
No, I think that's our intent, is to be able to try and keep this growth rate at this level. And for us also, unlike the rest of our peers, our rural growth has actually been quite strong, and even in the first quarter, our rural growth was about 16%. This has largely been due to the innovations we've launched, along with some very good distribution initiatives we have launched. So we do expect strong pickup in urban, but we also expect rural growth to be quite resilient for us.
Okay. Tell us a little bit more about the international business, because as you would have known yourself, in the last couple of weeks and months, there's been a significant slowdown in many pockets in Asia, and you get a lot of your revenues from, different Asian markets. Are you facing any heat over there? And overall, what kind of volume growth would you expect to see in the international business?
So our international business also grew at double digits in the first quarter. Our Africa business has been doing very well, and we are seeing good growth from South Africa, Eastern Africa, and Western Africa. So that seems to be on a very strong wicket. We are looking at some challenges in Indonesia, driven by the macro environment. Our Indonesian business also grew in the mid-teens in the last quarter, and that was far ahead of the industry growth, which overall has been somewhat flattish. So in terms of, I think, going forward, we are feeling very good about Africa, but certainly waiting and watching to see how the Indonesian situation pans out. I think we will still outperform the industry, but if the overall FMCG growth slows down, that could pose some challenges on Indonesian front.
Okay. Have your earnings already reflected the benefits of lower commodity prices, or is there more to go? Because your margin expansion has been solid in the quarter gone by, and you're sitting at almost 15% margins now. Can we see more on the upside because of lower commodity prices?
Yes, I believe so. I think the commodity price benefit has pretty much been baked into the P&L, but there are two other sources of margin expansion. One is a mix shift, particularly as a higher margin categories like insecticides and hair colors grow faster than soaps. That mix shift will help us. Second of all, as we premiumize our portfolio and launch new innovations, those tend to be higher margin. And then third of all, we have launched a series of cost reduction initiatives. One is called Project Pi. The benefits of Project Pi should roll in over the quarters ahead also. So we do expect to see a further margin expansion, though the commodity price benefits have been more or less baked in.
Okay. Tell us a little bit about fundraising. Recently, you did get a shareholder nod to raise up to 300 crores from the NCD route. But any more fundraising plans that you would have, say, in the next, 6 to 12 months?
No immediate plans as well. I think that fundraising option was more to provide us the flexibility in case there is a future need for fundraising. But at this stage, there are no immediate plans.
All right, Vivek, we leave it at that. All the best for the quarters to come. Thanks so much for joining us. That's the word coming in from Godrej Consumers. They say that there has been a gradual pickup in urban demand, but they're not seeing any pickup in rural demand just yet. In fact, there continues to be sluggishness over there, but they are launching 10 new products in various categories in the days to come, and that will actually help them aid momentum on the upside. But still down about 0.7% for the Nifty, no recovery at all. In fact, the Sensex is down almost 200 points, so hasn't been a good start to trade today. But ahead of the